Hi and welcome to this live currency strength indicator table video with me, John, on this Tuesday the 31st of January. Here we have the tables in front of us. We have two types of tables. We have the trend traders table and the day traders table. These are showing the same studies but just highlighting different time frames, and you can see that some of the currencies here are highlighted in green. That means that there is a confluence between those two trading time frames, and that's where we'll be focusing our attention in these videos. Now the tables auto update every 15 minutes 24/7, meaning that our members can see how the markets stand right now in real time. So if you are a member, make sure you log in. So what are the tables telling us today? Well, we've actually had quite a bit of a sort of move around with some of the currencies. You can see that the Australian dollar here, for instance, was S1 on the trend traders, was S1 yesterday on the day traders. If we go back to the rolling 30-day history here, you can see that yesterday it was S1. Even going into the evening, it was S1 on the day traders. That has completely flipped today, and we can see that it's actually W1 on the day traders, meaning that the momentum really is with the sellers on the Australian dollar at the moment. So short term, Australian dollar is weakening. Long term, in the bigger picture, we still have the potential for the trend to continue. And you can see that the same for other currencies as well. You can see that S1 on the day traders is the dollar, where in fact it is W3 on the trend traders. You can also see Kiwi here has appeared as W2 on the day traders, but it's S3 on the trend traders. So we're having a lot of fluctuations with the currency at the moment, and I think that's due to the type of week that we've got coming up. You can see if I just go over to the Forex Trader and economic calendar, you can see how much high impact news we have this week, including things like FOMC rate decisions, Bank of England rate decisions, and even ECB rate decisions, as well as non-farm payroll. So we have a really high impact news week, which could leave the currencies quite volatile, and support and resistance levels in these conditions can be broken through really easily. So really hard trading week to pull anything from the markets. So do be aware and be careful with any kind of trading opportunities that you do take. The highlighted currencies is pound Swiss. So I will go take a look at pound Swiss. I've had a look at some other pairs as well. We'll have a look at a couple of the dollar pairs, mainly just to avoid them. But, you know, pound Swiss is suggesting that we look for long ideas. I don't really think that's on the cards, so let's go and have a look at why it's not potentially something that you should look at trading. And the reason why I like to do this as well is because although the tables are suggesting a potential opportunity to us, you still have to take it in context, and you have to go and look at the technicals then surrounding that market. So it's always good to have a look at the market that is suggested from the tables like pound Swiss here, and just go and see how you could look at and approach that market if you were going to look for opportunities. Now you can see I'm on the daily time frame here. You can see that because chart partners in the corner, you might not be able to see it in detail there, but I'll zoom down. There you go. You can see pound Swiss daily time frame, and you can actually see that price has come up into the 1.1425 handle, where it was kind of like the neckline of this double top that formed back here in December, where we came back up into the 1.1550 highs, and we've broken through to the downside. We then found support around about the 1.1100, and we've traded all the way back up into this neckline resistance at the 1.1425, and price is really struggling to get through this point at the moment. So this is why I'm not really looking to go long just yet. I need some more conditions before seeing that. If anything, at the moment the conditions here, or confluences, are more pointing towards a little bit more downside for this market. Now if I go down to the 8-hour time frame, you can see in a little bit more detail why I'm not looking for the long just yet, because price is trying to break through this area of resistance at that 1.1425 handle, and you can see that we're failing every single time we come into this at the moment. So why would I want to try and get long at the highs here? It just doesn't make sense to do do so. If anything, if price was to break out of this wedge pattern that we're seeing form in the market, trade to the downside, maybe we could look at areas around about the 113.50, or you can see I've spotted the 112.50 down here, which was a really significant area of support in the past. Alternatively as well, I'd want to see price trade through and close above the 1.1425. If we have two successful closes above this area here, that would give me more confidence into looking for the retracement move and then a move to the upside, because you can see that we do have sort of the daily 200 moving average up here, as well as that 1.1550 handle where these highs came into play. So, you know, there is confluence up here if price can trade out of this zone, but for right now I would be sitting on my hands waiting to see what happens. Now if I go and have a little look at a chart semi correlated to this, now that would be dollar Swiss, because we have to remember you know, when we're looking at these cross pairs, we're looking at the major pairs as well. And if we go into dollar Swiss here, you can see that dollar Swiss recently traded out of this bearish channel. Now, why would dollar Swiss be of interest to us? Well, if we go back to the live currency strength indicator tables, you can see the dollar tops the day trades at S1. The Swiss franc is highlighted here as W3, W1 on the trend traders. So suggesting that we look for that weakness in the market. Now, what I did notice this morning was that we did break out of a little bit of an area, and I was looking for potential long opportunities. However, I feel that price is just bouncing into other resistance levels. Now, from this daily time frame point of view, it looks like there is good room to go up to the next area of resistance, which is the 0.94. We found support down at the 0.91. We've broken out of this bearish channel, so it does look likely that we could trade higher. However, if I go to a lower time frame like the 4-hour time frame, you can see here that price has come into the previous structure highs here and we've rejected. We've tried to trade out of the area. Sellers have drove price back down. That's not particularly what I'd want to see. I'd want to see, again, two closes above previous highs really gives me the opportunity to look for those long ideas. So I think for me at the moment, we're more likely to see dollar Swiss come back down, maybe even to the previous structure highs, before seeing any kind of continuation to the upside here. In fact, I would only be looking for longs if we were to trade above this high, and then I'd be looking for longs into that 0.94 area where you can see we had quite a lot of aggressive selling pressure. But I mean, like I said, this week, if we go and have a little look at the calendar, it is a very high impact news week. You can see you know, we've got data throughout the whole day today. Tomorrow is really important data, and then Thursday, you know, we've got Bank of England and the ECB. So this is one of those weeks where, you know, support and resistance levels are really going to be tested, and you more than likely want to maybe just be very careful with any kind of opportunities you do take, meaning you may want to take your trades this week at a lower risk. So I'm going to leave it there. Pound Swissy, I think, is probably best to avoid at the moment with regards to the fact that it is in and around this key area of resistance. If price trades above the 114.25 handle and we get a close above, that gives us the idea to then trade long. But for now, we're at resistance. Best to wait and see what happens. Thanks for watching this video update. I hope you enjoyed it, and I look forward to speaking to you in the next one.